Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of Euro USD, Euro Dollar. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So this is a 4-hour chart of DXY, US dollar currency index. If you trade on any USD pair, then knowing the body language of DXY, knowing the characteristic of DXY is extremely important. And as I have already discussed in my previous video, that we can see an ascending triangle pattern on DXY, and still it is very much visible to us because DXY is very bullish and still very much bullish. We can see that though we have resistance at the top, but whenever market is coming down from the resistance, it is not breaking the previous lows, which signifies that buyers in the market are extremely serious in taking the market higher. They want to take the market up, and as a result they are not surrendering to the sellers present in the market. If we judge the overall chart of DXY right now, then yes, there is a high possibility of DXY going higher. And if that happens, if DXY breaks the resistance and starts going up again, then obviously we will see selling pressure on Euro USD and GBP USD and other pairs. So keeping your one eye on DXY is extremely important. Now let's have a look at the chart of Euro USD. And just the opposite of DXY, we can see that Euro USD is somehow struggling near the last support of 1.0350. If you want a detailed analysis of the Euro Dollar Euro USD pair, then please watch the video that I uploaded on Saturday. I have discussed each and every level on detail. I do not want to repeat the same stuff. I do not want to bore you again. As I said, just the opposite of DXY. In DXY, we had an ascending triangle pattern, and here we can see that we have more or less a descending triangle pattern. It means that we have a support, but whenever market is going up, you can see that market does not have the strength. Market does not have the power to cross the previous highs, which signifies that sellers in the market are slowly dominating and buyers are weakening. So whenever we see this kind of a scenario in the market, we usually see market breaking the support and going down. Just the opposite of DXY. So here, what should be a trading strategy then? As of now, I just suggest you that you should not be trading in the middle of the chart. Okay, as I always say, be a trader, not a gambler, and it's our responsibility to protect our hard-earned money, isn't it? So the first good opportunity that may come on the chart of Euro USD is at the support. Okay, is at the support 1.0350. So if market comes down to this level, observe the market. In case if there is heavy selling in the market, if you see that DXY is very strong, heavy selling is present on Euro USD, then obviously you should not buy. Okay, but in case you see that market has come down to the support level of 1.0350 and market is somehow trying to take support, okay, you will get a confirmation in the form of a hammer. You can get a confirmation in the form of a bullish pin bar or any good price rejection from below or bullish engulfing candle. Once you see the market is taking support and on this level 1.0350, then only take a buy position. Okay, if you see the market taking support, go for a buy. But considering the present characteristic of Euro USD, do not expect a complete trend reversal as of now, because we do not have any fundamental factor that will be driving the whole market or bring a total complete trend reversal. At least you can expect a profit of 30-40 pips. So if market comes down and bounces from the support, you can go for a buy. That is your first trading opportunity. And in case if there is heavy selling in the market, if you see that market is breaking the support and going down, अगर बहुत ज़्यादा selling pressure होगा, तो you can go for a sell as well below this level. But yes, you must know whether this selling is strong or not. How you will judge? कैसे पता चलेगा? You will get the knowledge of heavy selling pressure by looking at the size of the candle. If you see that the size of the candle is big enough, big fat red candle, you will get a confirmation that yes, selling is high. Number of sellers are higher, much higher. Okay, in comparison to buyers, you can go for a sell as well. So if market go for bounces, you can go for a buy. Do not expect huge profit, but yes, 30-40 pips. In case market breaks it, you can go for a sell as well. If the selling is high enough, you can get good number of pips, 50-60 pips easily. Okay, and on the other hand, if market tries to recover from here, from the current market position here, then obviously you will be getting selling opportunity around this level. Already I have discussed, you can watch the previous video. Okay, I do not want to repeat the same stuff, but yes, for today, you can expect selling pressure around this level. Okay, around 1.0520, 1.0530, around this level you can expect some sort of selling pressure if market tries to recover. 0.0530, 1.0520, around this level you can expect some sort of selling. Why? Because of Fibonacci 38.2% retracement level. As of now, we do not see heavy buying on the market, so obviously every resistance will act as a good resistance and may act as opportunity. Okay, be a trader, so you need to observe the market first. Do not trade blindly. After all, it's your hard-earned money, so protect it. Okay, hopefully you got the idea. Follow proper risk management. My lesson may be wrong as well, so do not gamble. Bye bye, take care, see ya tomorrow.